episode 2 of the Cashflow Corner.
Yeah, welcome in to all the listeners here tuning in for episode number 2 of Cashflow Corner. Got myself, Jacob Thomas, and then twin brother Aaron, partner of Twin Lux Capital, Aaron Thomas, on here. So we're fired up here to get episode number 2 underway.
Yeah, thanks to all the listeners for giving episode 1 a listen. And as they say, give us a like and subscribe. We're available on all platforms, Spotify, YouTube, Apple Podcasts, and then we're also on Instagram, LinkedIn, and all of that. So definitely give us a like and follow us on there. And also, if you have any questions or anything like that, definitely feel free to visit our website. Our emails are on there. Shoot us an email if you have any questions. But definitely excited to keep this train rolling.
Yeah, we're definitely feeling the love and support from everyone. So, thanks for the comments, the feedback, and yeah, we're excited that you guys are tuning in for episode 2 and continuing this journey with us. Man, I don't know how you're feeling, Aaron, but I'm feeling a little more settled in here now that we got the first episode under our belt. I know, we kind of had some nerves and some different feelings about posting our first episode and finally getting that out there, but what I have found with, Aaron and I were coming up on like 2 years here of being entrepreneurs. And, one thing that I've continued to see from both of us is, if you continue to put yourself in these, these uncomfortable positions, just trying to, push yourself, you're going to see a lot of growth at the end of it. It might be hard. You're going to fail sometimes. You're going to feel uncomfortable. But yeah, I'm kind of feeling a little more settled in here and ready to go. How are you feeling, Aaron?
Feeling like a rock star. No, I mean, it's almost similar to, I would say, a round of golf when you're on that first tee. You got those first hole jitters and nerves and stuff like that, but almost just want to kind of fight through that first hole and from there settle down and go birdie hunting. So I feel like that's where we're at right now and excited to continue this process.
Man, you only get that feeling on the first hole. I feel like I feel that the whole round, but maybe that's just my golf game kind of talking to me. I'm not sure.
Yeah, I think it might be that right now, especially with the amount of money I'm taking from you on the course. Feel good about it sometimes, but then I just feel bad for you on the other times. So, but never too bad. But yeah, excited to kind of jump into episode 2 and really excited to get some more content out to our listeners. And I would say for today, we're really going to be diving into a lot of questions that we've been getting, more on the benefits and risk of really what goes into commercial real estate.
Yeah, and if if this is your first time and you're new here, really what we want to get across for this podcast is, we have a lot of content, stored up in the bank and things like that, but we really just want to, kind of hone in on a couple concepts, really try to, I don't want to say dumb it down, but just kind of break it down for you guys so that way you can kind of have smaller pieces. It's a little easier to digest. So, we plan on posting an episode. I'd say right now we're shooting for every other week, but we'll kind of see how that goes. But like I said, we're going to want to keep it, pretty short and concise. That way you guys can, click on different videos that you guys want to, learn more about as we go forward and things like that. So, but yeah, like Aaron talked about, for today's podcast, we're mostly going to touch on, the benefits and risk of investing in the world of real estate. What that looks like, kind of compare it up to, the stock market, some different mutual funds. We'll kind of, touch on what the risk and benefits look like versus, different investment vehicles as well too. So, like Aaron said, a lot of people have kind of been, asking about, these topics and these concepts. So, yeah, without further, teasing out the idea here, Aaron, let's kind of jump into, we'll start here with some real kind of basic benefits that you see across the world of investing in real estate. Kind of what are you seeing, Aaron? What are some big benefits that, are kind of playing out right now?
All right. Well, yeah, I definitely think there's a couple few key big ones. I think the biggest one that a lot of people kind of think of is that passive cash flow or the passive income that they're kind of getting. And a little plug or no free ads would be if you can give Robert Kiyosaki's book of either Rich Dad, Poor Dad, or Cashflow Quadrant. I think those are two really great books to kind of really help unlock your mind and really give yourself a different outlook of really what investing is in terms of really trying to maximize your assets, limit your liabilities, and increase your cash flow. I think is a great resource because I would say cash flow in terms of real estate, it's almost similar to that of a dividend of a stock where you're getting a percentage, maybe quarterly, yearly, something like that, where it's similar, where you're kind of having that money work for you and you're receiving a percentage every year for your money instead of just letting it sit in an account, make a few percent where you're actually earning 15, 20% a year, hopefully, on your money instead of just letting it sit and rot. And then I think another great benefit would be diversification of your portfolio. Let's say you're in some other investment vehicles, stocks, bonds, something like that. It definitely helps minimize some risk by spreading it out and then ultimately having the chance to have a higher upside on certain projects and certain deals where you could earn a higher return, I think is a great advantage. And then also, we'll kind of dive into later of the tax advantage with that diversification of your portfolio. You can actually write off, let's say, a taxable loss in one category for an income in a different category. So definitely helps decrease your taxable income and really have that money working for you. But just right off the bat, I think those are really two key benefits that really come to my mind whenever I think of commercial real estate.
Yeah, no, those are good points. And like you mentioned with, the different tax advantages and things like that, I feel like, for, Aaron and I feel like we could almost pretty much lay out a whole episode of what that entails. And, I know a lot of listeners start to really get excited about what the different tax advantages are, how those work. So we will definitely cover that. But before we kind of jump into that, one of the main benefits that resonates with me and what I think, should get the listeners a little excited, is the idea of hedging against inflation. Obviously with inflation sitting at, I believe it's at 3.4% right now. And it's been high, I think the last, 6, 12 months we're going on here now. So, obviously we're seeing inflation really start to come into effect of, everybody's daily lives, whether that's purchases, at the gas station, grocery stores. But really, people kind of forget about the inflation against, your investments and things like that. So, like Aaron mentioned about the idea of diversification, obviously people have, it's very common for people to have 401ks lined up, different Roth IRAs, different mutual funds that they're invested in. But really the idea there of inflation, that you really start to, kind of see the effects, especially right now, of inflation is definitely cutting into, a lot of these different investment vehicles where, let's just say on average, you're seeing anywhere from, let's say, maybe 6 to 8%, depending on what kind of fund you're in or whatever the situation may be. But, after you add in that inflation cost along with, at a time where you want to maybe pull out your investments, those fees on top of the, the inflation cost, there's a lot of, different ways that, it starts to add up to where it's cutting into your overall investment and, those overall returns. But with real estate, as we'll kind of allude to and mention here, there's a lot of different tax advantages and ways around to kind of, hedge against that inflation. So that for me is a key aspect of, getting more involved with, real estate investments.
Yeah, that is a great point. And I think that's a great reason why a lot of people do invest in commercial real estate to really hedge against that inflation. Because, like you were saying, if inflation is at 3.5%, you just want to make sure that your money is earning more than that percentage. As we were saying, if it's sitting in a savings account that's only earning 2-3%, instead of working towards you, it's kind of getting eaten away and really the total opposite of what we're trying to explain. But also on the other side of the coin of risk in commercial real estate, I think big reason or one of the main risks that pushes or shies away a lot of people is that ability of being illiquid, which is ultimately having your money tied up for 3, 5, 7 years, however long the deal may be. And I know that kind of scares a lot of people because you can't just cash out like a stock and have cash on hand, where it may be a problem if you don't have an emergency fund or something like that set up and you don't have any cash on hand. I can see why that may be scary, but it's also two-sided because it is a benefit where, let's say, if you're in the stock market and you're just kind of get scared or cold feet or something like that and just pull your money out and miss a bounce or something like that, it kind of works for you where you have to be able to ride that life cycle of the deal out. And throughout that whole life cycle, it's also great as well because you're not able to pull it out and you kind of just have to let it work for you and be able to kind of trust the process that it's going to work out in the end. So it is two-sided, but I know that is a big risk whenever people are looking at investing in real estate.
Yeah, no, and like you just touched on, and what I was going to say there too, Aaron, is it helps almost eliminate that factor of people when it comes to investment. The really down to the nature of of a human is, you kind of have these psychological thoughts of whether it's that FOMO, that fear of missing out when when times are good, when things are good. That's kind of when you start to see people get that FOMO effect kicking in, or at the same time, on the opposite side of the coin of when things are bad, people get scared, they want to pull their money out. But really the best way I can kind of help the listeners really kind of shift their framework around is, honestly, when things are bad and people are getting scared, for me personally, and I think you could probably attest to this too, Aaron, I think those are really some of the best, most powerful times to really start getting in on some different deals and things like that. But like you said, if you're in a deal, you have to live throughout the cycle of that deal, whether that's 3, 5, 7 years, whatever that may be. So it really ultimately kind of helps eliminate some of those you know mindsets of FOMO or fear, like you mentioned.
Yeah, that's a great point. And it really is that kind of two-sided way where it is a benefit that it kind of makes you stay in the deal and ride out the wave, where it's also a risk because I know that's why a lot of people kind of shy away from investing in real estate because they know their money's just going to be tied up for a while. But a lot of people just don't think it's tied up for a while, but it's going to be working for you for a while. And then while we're also on it, I would say another risk that kind of goes hand in hand with that is market risk. With any asset or investment class, there's always going to be a cycle and there's going to be ebbs and flows. And you just kind of got to be able to ride the wave because it almost is kind of what you were saying of alluding to human tendencies where people want to get in at the top and ride that wave at the top, but at the bottom, a lot of people aren't wanting to get in, but it's almost the opposite where you want to get out at the top and in at the bottom. And I think that's just one of those human biases, human tendencies. And I feel like real estate almost kind of removes those tendencies because you're locked in for the deal and you just kind of have to be able to trust that your money's working for you. And again, I feel like that's another risk that people always think about is they never know where the market's at. And you just got to be able to talk with other investors, be able to talk with the leads or the sponsors on the deal, and be able to understand their outlook, what they're trying to achieve. Because there's always money to be made no matter what part of the cycle you're in. And there's different strategies of where you're at in the cycle. So just being able to really understand that, I think, is a key point whenever you are investing.
Yeah, no, Aaron, that's those are really good thoughts and points. And like you mentioned with people, they kind of have this human behavior. And believe me, I'm no psychiatrist, no therapist or anything like that. But I can tell you, with any market condition, when things are going well and things are hot, people start to get that FOMO effect, and that is a real thing. But on the other side of the cycle too, when things aren't going well, people start to panic, people start pulling their money out, whatever the case may be. That's just human behavior. But yeah, so my point on that is through commercial real estate investing, that almost eliminates any of those, kind of thoughts of, hey, we're in a down cycle. Hey, now we're in an up cycle, because you could be in an investment that, the time or the hold period could be anywhere from 3 to 5 years, or it could be, as long as 7 to 10 years. So you really give your money an opportunity to, digest all those ebbs and flows throughout the market. So for me, I feel like it almost eliminates some of those thoughts that people have, if that makes sense.
Yeah, that's a great point. And I think really kind of flipping it back to the biggest advantage of commercial real estate is the tax advantages, and really specifically depreciation. I think a lot of people really understand maybe what appreciation is, but don't too much understand depreciation. Maybe in terms of, let's say, you just bought a new car off the lot, and a lot of people know as soon as you buy the car, if you just bought it for 35,000, as soon as you drive it off the lot, it's dropping down to 30,000. And really, in terms of commercial real estate, there's a tax loophole, or really a tax playbook that, I mean, all the wealthy really play in. And what it is that, for in terms of depreciation, if you have a cash flowing asset, you can use the depreciation tax loophole to depreciate it over 39 years. So in terms of a car, if you can depreciate a car over 39 years, it dramatically drops. So for a building, let's say it's a $10 million building, over 39 years, it's roughly what, 250,000. You're then able annually to take that 250,000 and write it off or take it against your income. So let's say the property generated 400,000 that year, you can then write off the expenses and then use that depreciation amount as well against your income. So that's where it kind of falls into place, where you can technically tell the government that you lost money in a year on a deal, because even though it cash flowed 350, $400,000, you can take that write off and say you actually lost money, which is where all the wealthy kind of take that to their advantage to then take that negative and offset other investment vehicles that they may have cashed out on that year. So it is that tax loophole of being able to ultimately decrease your taxable income and just using the rules to your advantage, which I think is really how we got into this. By, you see what wealthy people do and you just try to imitate what they do. And I think that's one of the biggest things for us, is just really trying to use it every advantage we can and really share those advantages to others that may not know about them and everything like that, like our listeners, just to be able to kind of help and spread that knowledge. But I know it's a hard concept to really wrap your head around. So if there is any questions or anything like that, definitely feel free to shoot us an email or reach out to us, because it is hard to describe and it's hard to really understand, but it's the biggest key takeaway is it's how you decrease your taxable income and almost use those loopholes to your advantage.
Yeah, I think definitely that if there was one thing for this episode to really truly get excited about and want to learn more about, it would be that tax advantage part that Aaron was mentioning. Because I mean, you think about it, your biggest expense in life overall day to day is going to be taxes. You pay taxes on everyday goods, you pay taxes on your property, you pay taxes on your income that you earn, you pay taxes on most of, if not all, your investments that you're currently in. So at the end of the day, like Aaron said, if you want to truly level up and get to that, that wealthy state of, investing, the best way to do that is to save money by, through taxes. And that's really the ultimate way of where you can kind of leverage, whatever your financial situation is. I know taxes, people think taxes, oh, I just have to pay it, this and that, but there are ways around it. And really one vehicle or one tool is, through commercial real estate.
Yeah. I know that was kind of a lot, and we tried to go into a little bit more detail, but I feel like that's what we're going to be trying to do is just pick certain concepts for each episode and really just try to dive into them and get into the details, but really into the simplest form that no matter if you're a seasoned investor just now starting off, that you're able to gain a little bit more knowledge and a little bit more confidence whenever you are going into a real estate investing deal. So I feel like that's kind of where we're going to lead off or end off for today. And just want to appreciate all the listeners for tuning in again and just couldn't be more happy for the journey ahead.
Yeah, no, thanks again for listening in here to episode number 2. We're like I mentioned previous in the show, we're going to try to get these out every other week. We'll kind of see what that schedule looks like moving forward, but yeah, keep tuning in, keep sharing on social media. If, like Aaron said earlier too, if you guys have any questions, you guys can shoot us an email. We're wanting to get the answers to any kind of questions you guys have. But yeah, thanks for tuning into episode 2.
Yeah, thanks.